This article is called Impact Investing: Harnessing Capital Markets to Drive Development at Scale by Anthony Bugliosi. It deals with how impact investors seek to make for-profit investments that also look to provide social and environmental challenges with solutions. Let's begin with the biggest question when it comes to investing for a greater impact. Where is the money to complement charity and government to bring solutions to be found? The Rockefeller Foundation launched a Harnessing the Power of Impact Investing initiative in November 2008 to address such a question. So why is impact investing an emerging trend? 3 things. There is a growing importance of private capital, the wealth concentration is among the investment-oriented, and there is lingering impatience with traditional approaches. Also, developing the capital markets such as impact investment banking. For example, in London, an investment bank serving social sector clients in planning impact investments was launched in 2007. So how do we plant the seed? A couple of things. Build platforms for collective action. How big of an industry? Participants, who has the money and who has the connections. Creating credible standards for measuring social impact with help from an independent credit rating agency. Also, developing the capital markets such as impact investment banking. For example, in London, an investment bank serving social sector clients in planning impact investments was launched in 2007. Wealth advising. In this, financial advisors can influence their clients. Fund management. For example, Root Capital is a non-for-profit fund investing in services in poor countries. And finally, retail client mobilization. Innovators developing technology to make impact investment more accessible to retail investors. So what is the economic downturn to this industry? It's a little unpredictable. However, it seems that the financial crisis created a sort of benefit in terms of making human resources available to the impact investment industry. Firms have even experienced growth during this time. Overall, I feel that this article does a good job in going through all the aspects of impact investing. What it is, who's doing it, why it's needed, and what the future beholds. It mentions in detail a couple of steps how we can build a solid foundation for impact investing. For example, creating a good standard and developing overall capital markets, etc. However, one thing that I feel that it should definitely have gone into were solid concrete examples of what those companies were actually doing with their investments and what kind of social or environmental change they were bringing in their work. It gave a lot of examples of companies that were in, say, impact investment banking or wealth advising, but it didn't give me any examples of how a child could be insured shelter for one night by a simple expense, or how a family could be fed at a certain time when food is optimal to be shipped in. How the investments are happening is great, but what they are doing is a different story. Overall, it was a well-written article. It's trying to encourage society to get into this great initiative and invest for impact instead of bracing for impact.